Nitin Spinners Limited Q3 FY25 earning conference call. As a reminder, all participant line will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone telephone. I now hand the conference over to Mr. Avrish. Thank you, and over to you, sir.
Thank you very much, everyone, for joining the call. On behalf of Spinners Limited, I welcome you all to Q3 FY25 earnings conference call of Nitin Spinners Limited. We are pleased to host the top management of the company. Today we have with us Mr. Dinesh Nolka, promoter and managing director of the company, and Mr. P. Maheshwari, CFO of the company. We will start the call with initial commentary on results, and then we will open the floor for questions and answers. Now I will hand over the call to Mr. P. Maheshwari, CFO of the company. Over to you, Maheshwari, sir.
Thank you, Avnishji. Good evening and warm welcome to all the participants to this Q3 and 9 months FY25 earning call of Nitin Spinners. I hope all of you had a chance to look at the investor presentation that is uploaded on the company's website as well as stock exchanges. Before Sri Dineshji elaborate on the present industry scenario, I am giving below the brief financial highlights for the quarter and 9 months ended 31st December 2024. Revenue for Q3 FY25 was rupees 839 crores against rupees 822 crores during Q2 FY25. That is an increase of 2% Q-on-Q basis. On year-to-year basis, revenue increased by 11.7% from rupees 750 crores in Q3 FY24 to rupees 839 crores in Q3 FY25. Revenue for 9 months ended 31st December 2024 is rupees 2,464 crores against last year revenue of 2,105 crores. That is an increase of 17%. EBITDA for the quarter stood as 117.16 crores as compared to 115.15 crores in Q2 FY25 and rupees 102.73 crores in Q3 FY24. EBITDA for 9 months ended 31st December is rupees 351.11 crores against rupees 260.81 crores in the same period last year. That is an increase of 34.6%. EBITDA margin for the quarter is 13.97% against Q3 FY24 margins of 13.69% and Q2 25 margins of 14%. Profit after tax for the quarter is rupees 44.78 crores as against rupees 42.16 crores in Q2 FY25 and rupees 31.75 crores in Q3 FY24. That's an increase of 6.2% quarter on quarter. Profit after tax for 9 months ended 31st December is rupees 129.06 crores against last year PAT of rupees 92.35 crores in the same period. That is an increase of 39.7%. EPS and cash EPS for the quarter is rupees 7.96 and rupees 14.59 per share respectively, and cumulative EPS for 9 months is rupees 22.96 and cash EPS is 6. Coming on the company's operational performance, overall the company has delivered steady performance during the quarter in view of favorable raw material prices, though low selling prices impacted margins slightly. On the operation front, our spinning capacity is currently running at over 95% utilization, while the weaving and finishing division are operating at more than 90%. Given the current capacity constraints, it is felt that achieving further revenue growth will require strategic investments in expanding the production capabilities. To maintain our growth momentum, the Board of Directors have approved a significant capex plan of approximately 1,100 crores across the existing verticals, that is yarn and fabrics, mainly focusing on value addition and cost efficiencies. The expansion includes addition of approx 66,000 spindles in spinning, boosting our production capacity by about 22,000 metric tons per annum. About 60% of yarn produced will be used for fabric activity. In weaving, we will be adding 250 edge-rapier rooms along with enhanced dyeing and finishing capacity of about 35 million meters per annum. Additionally, we will expand our renewable energy footprint with addition of about 11 megawatt AC solar power capacities, aligning with our sustainability goals. The expansion will be funded by approx rupees 800 crores of debt and remaining by internal accruals, and will be implemented over next 24 months. That is all from my side. I now request Sri Dinesh to apprise about industry and business scenario.
Thank you, Maheshwari. The textile industry is showing signs of resilience and growth with encouraging developments across key markets. Despite some challenges, the overall momentum remains positive, with exports recovering into 2024. This growth reflects the industry's ability to adapt and overcome the impacts of high inflation and rising interest rates in major markets. Despite challenges like price deflation, trade disruptions, the spinning segment continues to show strong momentum, reinforcing India's position as a key player in this segment in the global textile market. On the domestic front, the cotton prices have stabilized with expectation of reasonable crop. The prices are expected to remain stable towards lower end, ensuring more predictable input costs moving forward. Although domestic prices are still marginally higher than the international levels, the overall demand scenario is gradually improving. Additionally, we expect spreads to improve in the coming quarters, further supporting profitability and our operational efficiency. Looking ahead, the prospects of the textile industry are optimistic, with growth expected at a decent pace in 2025, driven by stable cotton prices, favorable forex rates, and a continuous focus on operational efficiencies. Various expected initiatives by the Government of India to boost textile manufacturing and exports add to the positive outlook. With these developments, the textile industry is well positioned for reasonable growth and expansions in the coming years. To maintain our growth momentum, we have announced capex across all our existing verticals, details of which are shared in investor presentation and Mr. Maheshwari as well. The expansion will enable us to strengthen our market position, broaden our product portfolio, and introduce high value added and niche products, and also increase our renewable power capacity, which will lead to the cost efficiencies. With these investments, we are confident the company is well positioned for sustained growth and to meet the increasing demand for quality fashion fabrics from both domestic and international brands. With this, I would like to open the floor for the question and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Saransh from SDN Investment. Please go ahead.
Good evening, sir, and thank you for the opportunity. Sir, just wanted to understand, as in the opening remarks, you highlighted that the cotton prices have stabilized and domestic demand is back into attraction with the export recovery. So can you throw more light in terms of how the export have picked up in the last 9 months, and how do we see export picking up in short to medium term from here?
Here I would like to highlight first that in the year 2023, our average exports of cotton yarn from the monthly average exports of cotton yarn was in the range of about 60,000 tons per month. I'm talking about the whole country. Now, this has recovered to about 100,000 tons at this point of time. At the peak, it has gone to about 120,000 tons as well. So slowly, as the market are recovering, we are seeing that there is a demand coming back. Also, the lower prices of the cotton as well as the other fibers is inducing customers to go for more purchasing as well.
And sir, how do we see the demand growth as far as the domestic market is concerned?
Domestic market is steadily growing. There is a steady demand in the domestic market. We see various organized and unorganized players both moving in the right direction. Also, some of the exporters of the finished goods are also seeing a good demand. They have a good order book in the exports, especially on the garmenting side. So they are also doing reasonably well.
So now, if you indicated that the domestic cotton prices is still at a premium to the international prices, so if one want to take a short to medium term view, how do you see the yarn prices or the spreads moving up for the industry? Because we as a company has announced the capex, our competitors have also announced the capex in the spinning. So how do you see and the current spinning industries, what is the status of the industry going on?
First of all, the spinning industry especially is passing through one of its rough phases. Here, a lot of consolidation is happening. We have seen a lot of smaller capacities to the tune of, if we talk about the total capacity, about 12 to 15% of the spinning capacity is already closed or on the verge of closure. So there is some traction due to that as well, because the demand-supply situation has already balanced there. Plus, there is also, as far as your question was that we see there is a demand, we see that the going forward demand particularly will be better in the export market, seeing that we foresee that wars, etc., which has the geopolitical tensions which has happened all over the world will settle down going forward, and that may percolate to a better demand scenario as well. Also, we are seeing the demand recovery coming back in markets like US as well as in Europe. So overall, the scenario looks reasonably okay for us to go in for this kind of capacity expansion. As far as spinning is concerned, we are not going for any major capacity additions. If you want to see from the point of view of sale, it will be a very small capacity addition if you compare with, because most of the capacity which is being created will be used for our fabric division only.
Sure, sir. The last question from my side before I jump back in the queue. Now, the much awaited capex that we were waiting for, and we have announced on the 1100 crores of the capex. So just wanted to understand the IRR that we are expecting on this. And secondly, since all this capex is likely to be come by in next 24 months. So from here till next 24 months, what is the growth drivers for the company and the levers that company has in terms of the improvement in our margins?
First of all, as far as I'll answer the second part of your question. First of all, we feel that we are trying to do a lot of cost optimization part. So that has been a continuous process with us, and due to which we have been able to hold steady our margins also. So we expect that those results that will be also fructifying going forward. Also, as there is a stability in the international prices, as well as in the means not the stability, I would say it is at the lower end of the international prices at the lower end of the cycle. We feel that any uptick in that as well as stability in Indian cotton prices will lead to a better margin scenario for the delta from yarn to fabric, yarn to fiber will also be better. So going forward, we see that should improve our margins going forward. We are at the lower end of the margins, I would say. So that is one part. Going forward, as you say, that for the next 2 years' time, we'll be seeing that this projects which we have announced, that the total will be completed within less than 2 years. So we expect that it will partially operational performance will start to kick in going forward in next 1 year's time as well. So accordingly, that will be the revenue figure for us. As far as the IRR of the project is concerned, I think the IRR should be in the range of 14 to 15%.
Okay. So the indicated terms the margin which you indicated the cost optimization. So last 2 quarters we are seeing 14% margin and 15% margin. So do we expect 100 to 150 basis improvement in the margin at least in the coming quarters, or probably it will be on the lower end to that numbers?
I would not like to comment on the exact because we do not know how the market scenario will behave. But definitely on the cost side, we are having quite tight cost controls, which will help us to control our costs. The margin is a factor which is being decided by the market conditions as well. So I'll not like to comment on the forward margins, but definitely, as you see, we have been able to hold steady to our margins in last nearly one year's time. Any improvement we expect an improvement as such.
Sure, sir. I have a couple of more questions. I'll come back in a few. Thank you, sir, and all the best.
Thank you. The next question is from the line of Falguni from Mansarovar Financial. Please go ahead.
Yeah, good evening, sir. Sir, I just have one question. What percentage of our revenue is derived from fabric at the moment, meaning annual revenue?
At the moment, our revenue is about 25%, and with this capex going forward, we are expecting that it will be one-third of our revenues, the expected revenues.
Okay. Sir, and one more on the cotton yarn spread. How are they now, and what do you expect them to be in the coming quarter? Let's say, how would Q4 be versus Q3 as regards cotton yarn spread?
It is definitely better than what it was in the last quarter, but I'll not be able to give you the exact number. I can just tell you that in the last quarter, our raw material prices were about 161 rupees a kg, and our yarn prices were about 265, 266 rupees a kg. So delta was about 100 rupees. We expect the similar delta, or maybe a higher delta, slightly higher delta, to be maintained in the coming quarters.
Okay. Thank you, sir. That's all from my side.
Thank you. Participant who wish to ask a question may please press star and 1. The next question is from the line of Kaushal Kedia, is an individual investor. Please go ahead.
Yeah. Hi, sir. Thank you for taking my question. Sir, I want to understand what is the debt profile of the company right now? What is the debt outstanding as of today?
Maheshwari, can you highlight on the debt side?
Yes, sir. So, as on 31st December, our total term debt is about 850 crores and working capital another 400 crores. So, it's a total of 1,250 crores as of now.
And so, out of the 1,100 crores, how much of the debt do we plan to increase?
So, for the project, we are proposing 800 crores of term loans.
So, debt will go up to around 2,000 crores plus.
But repayment will be there over a period of 2 years. So about 350 crores of loan will be repaid over next 2 years.
How much of the loan?
350 crores of loan will be repaid over next 2 years.
Okay. So we will come down to around 1,700 crores. 1,700 crores.
And there might be slightly increase for working capital. So by March 27, we'll be close to about 1,900 crores present debt.
Okay. And this debt also is under the same state subsidy scheme, the new debt that we will be taking on?
Yes.
And sir, the previous subsidy, have we got that till now, or we've not, because the interest numbers are not showing that, the finance charge?
No, I think it is approved. Yeah, my please. Yeah, please.
Yes, sir. The finance cost is net of subsidies.
The finance. So this finance cost that we showed at almost 20 crores, 21 crores is net of subsidies, you're saying?
Yes.
Sir, this works out to around 80 crores per annum, and our debt as of today is 1,250 crores. So that's roughly 6%, 6-7%. And so the subsidy received for the previous quarters, which we received late, that has also been accounted for?
Yes.
So where did that come in the financial? Which quarter?
No, it was accounted in the last quarter only.
Okay, under which head?
No. Basically, I think the previous, we have not accounted for any early quarters subsidies. We as the subsidy accrues, we have accounted for it accordingly. We have not considered any subsidy for the prior period, so it has to be considered somewhere else.
No, because for December 23 and March 24 quarter,
we were not able to get the subsidy for that. We were not able to get the subsidy. The period started with this year only.
Oh, this year only. Okay. And second question is, what will be the cost of the new debt and what is the cost of debt as of today after subsidy?
At the moment, I think the blended cost, our total blended means our cost is about 8.7%, and for the term loans I'm talking, and the net of subsidy is about 5.7%.
So
And
5.7%. If I take 6% also, roughly it should be about 6% should be about 72 crores a quarter, but we are showing a tad bit more.
I think
about 80 crores, 70.
yeah, but we have working capital costs as well, so that is not subsidized.
Okay, that is okay. Understood. Okay. Okay, sir. Oh, and the new debt will also be subsidized in the same way?
Yes, same way.
And sir, are we seeing any issues in Bangladesh? Because I think we supply about 16% to Bangladesh. Our 16% of revenues are in Bangladesh. So are we seeing any issues there, or it's regular business?
No, I think no, we are not supplying. Our 60% revenues are not there in Bangladesh, please. Our revenues are about 30% of our sales. Total sales is in Bangladesh. So first of all, let me correct you on that. Yes.
No, I thought 16, because I think previously it was reported somewhere 16%, 16.
No, you are talking 60%.
No, 16, 16.
Yeah. It is about in total about it is about 28 or 29% for this quarter.
Okay, so we are not seeing any issues in the regular supply chain with Bangladesh or any disruptions out there. It's business as regular.
As it is, no business change.
And sir, what do you feel on the entire Bangladesh issue? What kind of an impact will it happen? Will it have on the textile or garment industry in India? Positive impact, or?
First of all, that means political disruptions in any country definitely impact the business in a long term. Short term, there may or may not be having any disruptions, but definitely the new business which is supposed to come to Bangladesh is moving out of that country. They may be able to hold to the quantities or volumes which they are doing, but new business is definitely coming to India as well as to other competing countries. So to that level, we will have an advantage, definitely. First of all. Secondly, also because of their capital crunch, the new investments also have stopped, especially on the back end of spinning and fabric manufacturing, which they were doing in a big way during 2019 to 2022-23. So that augurs well for us, although their garment capacity is increasing, but due to their working capital cycles as well as on the capex side, they are not able to grow their take more loans on that side and increase the capacity. So that should help the Indian players, and we are one of the closest suppliers to them. By road, the goods can reach within less than 2 weeks to them, and by sea, the goods are reaching within 3 weeks' time. So that is an advantage which they cannot avoid. So they are rather the dependent part of their textile industry is dependent on the supply chain from India as well. So I don't foresee any major issues coming from India, and we should have rather some advantages only.
Okay, sir. That's it. Thank you from my end. Thank you very much, sir.
Thank you. The next question is from the line of Chirag Shah from White Pine Investment Management Private Limited. Please go ahead.
Thanks a lot for this opportunity. Sir, just one question. Sir, are you a bit late in announcing the capex because you are full at capacity, and for next 12 months there will not be any capacity available if I take current quarter as a base because. So are you a bit late, or and if yes, then what was the consideration why you delayed the announcement of the project?
First of all, I don't think we are late. We are not at all late. We have to look at the various options available to us. What are the areas where we can grow our products? So, being in a very challenging environment in the spinning from last nearly 2 years' time, so we just wanted to see that there is a stability in the demand coming in, and then we are able to decide the kind of product ranges, the kind of new products which we can do, then only able to do it. So we had very cautiously evaluated our options and then gone for the instead of going in for investments without a thought, we thought let us spend some time on the drawing board first and then go ahead with the project.
And the second is your IRRs that you indicated on the project are similar to what you made earlier, despite having more value addition in it, right? So are you a bit conservative in your IRR guidance, or is it based on current market environment? And if you could just share some light, because you are increasing your weaving capacity, your spinning is going to be captively consumed, fabric capacity, I mean, etc., etc. But your IRR numbers that you're targeting seem to be a bit low.
First of all, with this more and more value addition, investments also go more. So your capex allocation also increases. So EBITDA can be improved. Definitely, EBITDA is a different number, could be different number. But IRRs, we have to look at IRRs, what we have seen in last 1 or 2 years, and remain conservative on that side. It is better to remain conservative on that side, because you have to go with your past experiences also, and also factor the worst conditions as well. If it comes better than this, it is good for all of us.
Yeah, I was asking the same question, sir. So it is more based on the recent demand dynamics and pricing dynamics, your IRRs.
Yes.
If things turn out to be better, because I'm not going back to the best periods, but we have had better periods than what we had in last 2 years, right? As a business cycle. Yeah.
Yes, I agree with you.
Okay. So, would it be possible for you to indicate what kind of margin assumption you are building in this IRR? Would you like to share that? It will help us to understand what could be a normal IRR in case scenario is better than what we were in last 2 years.
Basically, as far as overall margins are concerned, with this project, particularly what we are envisaging, we are envisaging an EBITDA levels of 20% plus. So 20% plus above. Yes. So we are, because it's more from end to end. It is from yarn, from fiber to fabric. Not so instead of dividing it in various parts. So that is the area where we are targeting.
Great. And asset turn would be like it has been in the past, right? Or it would be have a lower asset turn.
Yeah, asset turn will be 1:1, I think.
1:1, right? Okay. And sir, lastly, you said some of the capacity is coming within 12 months or around a year.
No, in this particular capex plan, what we have discussed, we have also put in certain upgradation and cost efficiency plans also for our existing plants, which is to the tune of about 50 crore rupees. So that will be taken care within next 1 year itself. Also, some small capacities on the weaving and finishing side can start within this by the end of next financial year. So some small top line can also be achieved there as well. So some of the capacities in parts will start to come in.
Okay. So basically, our volume growth story would happen 2 years from now.
From in FY27.
FY27. Is there any lever to increase the volumes over next 12-18 months, or what we are doing? So what is the peak utilization that we can go? That's what my question was. We are at 95% right now, around 90-95%.
Some small, means we are already running at nearly peak utilization in spinning. Not much things left there. Some small debottlenecking or something may happen in next 1 or 2 quarters. So that may add to very small capacity. On the weaving and finishing sides, we are running at nearly the top capacities. Knitting can add something more. Utilization can improve there slightly, so that should add. Other than that, only the cost efficiency will play out.
Yeah, because our yarn production since last 2 quarters is around 27,000 metric ton yarn production. So it should stay in that ballpark, maybe 5% plus minus.
Yeah.
Great. Thank you, and all the best.
Thank you. The next question is from the line of Amit Kumar from Determine Investment. Please go ahead.
Yeah, hi. Thank you so much for the opportunity. Can you hear me?
Yes, we can hear you.
Yeah, so just one question. So, on one side, we are basically saying that, 15% of the industry, capacity is basically going out of the system or, getting shut down. But when you look at the major players, Vardhan, yourself, you're sort of, adding a lot of capacity, fairly strong capex, from both the companies, really. So just sort of trying to, understand this thing, is there not an, opportunity to sort of grow inorganically, or what's the constraint there in terms of, I mean, you are looking to sort of add capacity, somebody is looking to basically shut down capacity. I mean, it's very straightforward to assume that, transaction can be, potentially made here. So what's the reason, why you would not look at inorganic, growth opportunities rather than organic?
First of all, the major capacities which are going down today are due to their uneconomical operational sizes also. Major capacity like 5,000-6,000 spindles, 10,000 spindles capacity, which are not an economic size. So they are not able to manage the costs at that level. That is one of the reasons. Secondly, certain technology has become very old, so that technologically they have a disadvantage in terms of their operational costs. So the companies which has continuously upgraded their infrastructure, their machineries, have been able to maintain afloat. Otherwise, some of the capacity they have to stop because even they are not able to recover their operational costs. So these are the two major reasons. And thirdly, insufficient funds to run the mills because of lack of capital with them. So that is also one of the major reasons why most of the companies have gone out. So any company which is in the third category could be there, which can be acquired. Otherwise, there is no point in acquiring or going in for acquisition of a company which is or asset which has which has a high operational cost. So that will not be margin accretive to us. Thirdly, also on the quality front, also most of the older units which are more than 15-20 years old have a lot of disadvantage in the present quality terms. Today, most of the yarns which is sold is compact yarn. They have higher even the stringent quality requirements, which was not the case for the units which was about 15-20 years old. So these is one of, and thirdly, economic size, as I told you. So if some good opportunity comes in, definitely we can evaluate that and accordingly going for inorganic growth as well. But at this point of time, we do not find any such asset basis.
Okay, interesting. And my only sort of surprise here is the fact that I think 15%, spinning is a pretty big industry, in India, given domestic demand and, export opportunity as well. So that's going to grow even further in the future. But I mean,
this particular capacity which is down has been over a period of time. It is not that they have suddenly stopped. It is over a period of time. And let's say the installed capacity today is about 55-56 million spindles, and the operational is about 48 million. It is not that this capacity of 7 million spindles have stopped all of a sudden. They had stopped over a period of time. Some spindles have stopped maybe 3-4 years back itself. Some units stopped in COVID and not started only. So it is the total capacity I'm talking of. I'm not talking what was the capacity 2 years back and what is the capacity today. Overall capacity utilization is only 85%. That's what I'm saying.
Okay. Understood. That's much appreciated. Thank you so much.
Thank you. The next question is from the line of Akshay Kothari from JHP. Please go ahead.
Yeah, thanks for the opportunity. So just wanted to know the breakup of the capex. So around 700 crores would be for the fabrics, 300 for spindle, and 50 for renewable power, right?
No. Our breakup is spinning is 400 crores.
Okay.
This includes the renewable power.
Okay.
For the spinning. Then fabric is about 550 crores.
Okay.
And 50 crores is for the cost efficiency or improvement plan in our existing units. So this is 1,000 crores, and another 100 crores is for margin money for working capital.
So, sir, excluding the power side capex per spindle is around 55,000 or 60,000?
It should be in the range of 56,000-57,000.
Okay. And sir, I recollect, where are we putting this plant? Is it going to be at Begusarai?
It is most of the capacity is coming in our Begu plant, which is the new plant which we start in Chittor district in 2018-19. At the same place it is coming in.
So last time I recollect, we did the capex in much lesser time. So is there any chance that you may complete it in much lesser time?
It's a reasonable size capex wherein a lot of civil construction also has to happen. So keeping the things simple, we would like to start by the delivery of the kind of schedule which we have given, and we'll try to improve as it is possible.
So the numbers will start coming in from FY28 onwards, right?
FY27.
So 26, 27, 24 months. So full impact of the numbers.
As I told in my earlier one of the earlier questions also, that this will be implemented in the phases. Parts will be getting started. So considering that, we will be able to the numbers will start reflecting. If you want to see the full capex number, yes, full year number would be in FY28. Yes.
Understood. Yeah, that's it from my side. Thanks a lot and all the best. Yeah.
Thank you. The next question is from the line of Rahil Shah from Crown Capital. Please go ahead.
Hi, sir. Good evening. So, considering this new capacity, full impact or even partial impact coming from FY27, any outlook or guidance sort of for the next year, coming financial year, FY26? What kind of revenue numbers one can assume?
Normally, we do not give any financial guidance for the next year. So that is not we are following as a practice.
So, directionally, anything better than FY25 or something? Do you expect, like, given the market conditions and the demand?
The revenue guidance definitely is a delta of the kind of cotton prices and the differential with the yarn as well. So a lot of it depends on the raw cotton side. We expect the raw cotton to remain at the similar level what it was there in this financial year. So expect similar kind of revenue numbers going forward as well.
But you definitely expect improvement in margins given your cost efficiencies and optimization activities.
Yes, optimization activities should add to our margins.
Okay.
And rest depends on the market conditions as well.
Right. And can you just please reiterate the IRR you were expecting? I missed the number for the new capex you're doing.
In the range of about 14 to 15%. That is the IRR.
14 to 15%. Right. Okay. Got it. Thank you and all the best.
Thank you. The next question is from the line of Reena Rathod from KVR Capital. Please go ahead.
Yeah, hi. Thank you for the opportunity. Am I audible?
Yes, you are audible.
Yeah, hi. So I had a couple of questions regarding the capex update. So this 1,100 crores that is the total cost. How are you bifurcating this for FY26 and 27? You've given across verticals. I was wondering, based on the years, the next 24 months, how do we segregate this? And regarding the capacity being commissioned, can you throw some light on the timelines for the capacity being commissioned? Like, I'm assuming it will be in a staggered manner. Could you help me understand that?
First of all, there is no such breakup at the moment available with us, how much we'll be doing in FY26 and 27. If you see, normally the capex is back-ended. Initially, because only the construction and the advances are being placed. So normally the major capex comes in the last 6 to 7 months of the project. Of course, they will be divided in 3 parts. We have spinning, finishing, and weaving segments working in this direction. So broadly, you can, for the number purposes, you can divide it the total capex in 2 parts, half in the FY26 and half in FY27 as well. So that is broadly, it's a ballpark number which I am talking about. And as far as the completion date, we are assuming that we should be able to complete this in the last quarter of 2020, FY20, in the calendar year 26, maybe somewhere in October to December of 26. We are expecting this to complete. the complete project.
Okay. Also, could you elaborate more on the benefits? Like you mentioned, interest subsidy, capital subsidy, electricity duty benefits, and RIPS. So could you elaborate more on that?
Normally, electricity duty benefit in Rajasthan state is about 60 paisa per unit, so which is nearly 10% of our power cost. Then about we will be eligible for about 5% of the interest subsidy, interest subject to about 2.5% of the total capex, total eligible investment, something like this. So this works out to about 2.7 to 3% of our this thing. And there is a capital subsidy of about nearly 180 to 200 crores spread over next 10 years. So that is equally divided every year we get.
Okay. Thank you. Just a couple of more questions. How do you see the current cotton season coming along, like in terms of crop size, arrival, quality, and how much inventory do we see in quarter 4?
First of all, cotton crops remain. We feel that the size should be same as last year. There should not be a major deviation from there, plus minus 2% to 3%. That's all. There should not be major deviation. Quality-wise, this year's crop is definitely better than what we have seen last year. It is very well irrigated and the rains are also appropriate. So the quality is also good. And the prices we are since and MSP operations are on in India, nearly 45% of the crop is being taken up by the Cotton Corporation. We expect that the cotton prices should remain at this MSP levels of 54,000 around. Can you hear me?
Yeah, I can hear you. And okay, yeah, thank you. Thank you so much.
Thank you. The next question is from the line of Keshav Kar from Counter Cyclical PMS. Please go ahead.
Sir, I want to know your thoughts about forward integration into garments in the future. Any plans, or we'll expand only in fabric and yarn?
At the moment, it is only in fabric and yarn. As far as garmenting is concerned, in my past discussions also I have highlighted that this will be a completely new arena for us. And we want some major kicking, like a good PLI scheme or something, to venture into this particular arena. We want to go with a reasonable size whenever we go in this. I want to be a reasonable player also. So looking to that, we are waiting for some good initiatives, incentives coming in from the government side. If something of that sort comes up, definitely we can look ahead. Otherwise, in the routine course at the moment for next 2 years, we do not have any plans for the garmenting.
And also, sir, regarding this for the next 2 years, so what kind of volume growth can we expect from the existing operations unless new capacity comes? So can you give us some idea in terms of percentage or absolute numbers?
It has been highlighted clearly in our investment presentations also that we are running at nearly 95% plus capacity. In fact, in spinning, we are running at 97%. So spinning, we do not expect any major volume addition. Part of it small, very small, can come by debottlenecking or something like this, but which is very, very insignificant, I would say. So as far as volume is concerned, I do not see any major things coming in next 12 months at least.
And so what about the fabrics? Over there it's mentioned 85% utilization. So can we go to 100% over there?
We are above 90% in our fabrics. In our weaving and processing division, we are running nearly 90% plus capacity utilization. So there we can expect it to slightly improve, which we are targeting as well. So that should slightly improve by 5-7% maybe.
And sir, also, are we into the processing and dyeing, or we are only making the fabric and that's all?
We are dyeing, finishing, printing, everything. Completely.
Okay. Okay, so thank you very much.
Thank you. The next question is from the line of Manish Oswal from Nirmal Bang. Please go ahead.
Yes, sir. Thank you for the opportunity. Most of the question already asked. I have only one question in terms of the trade shift from Bangladesh to India. Is there any inquiries or any trend you guys are picking up for the medium term in India, and that we can benefit out from that trend? So can you comment on that thing?
Basically, what we are seeing at this moment is the garmenting capacity at the moment in India. Garmenters are getting very good orders from overseas customers, especially on the knit side. So there are good orders with most of the knitting players today. So that has shifted, not shifted, I would say. The additional new orders are not going to Bangladesh and coming to India. So in this, India is quite strong in fashion kind of products. So capacity-wise utilizations and improvements should happen in that particular segment. Knitting was quite down for last one and a half years. Now it has come back in a proper manner.
Okay. And secondly, sir, you made a comment just now. Okay, in next 12 months there is no possibility of volume growth. So in terms of earning trajectory for us for next year, what will be the driver? It will be margin expansion due to cost reduction measures or value-added category adding the margin. So earning for F26 earning growth driver, what will be those drivers, sir?
Basically, I have already highlighted that in my earlier comments also, that we should be seeing better cost efficiencies. Yes, definitely we'll go ahead with better product, try to do better product mixes also. And going forward, since we are also expanding in various products in our new capacity, so we will try to implement them in our old plants also. So it should be a mix of a better product mix, cost efficiencies, and some slight debottlenecking. Also cost efficiency in terms of new modernization or the cost efficiency improvements what we are doing in our this plan as well.
And the new capacity, what will the incremental margin profile? It will be correct?
If we the new capacity, if we see if that means today our fabric is about 25% of our fabric is about 24 to 25% of our sales. Going forward, this should become nearly 33% plus. So that should lead to the improvement in the margin by 150 to 200 basis points overall, if conditions remains as it is. So margin profile should improve going forward.
Sure, sir. Thank you. Thank you.
Thank you. Participants are requested to press star and 1 on their touchtone phone to ask a question. The next question is from the line of Falguni Datta from Mansarovar Financial. Please go ahead.
So thank you for the follow-up. So I have one more question, which is on the volume. What was the sale volume, yarn sale volumes for the quarter?
I think it's there in the presentation also. I think 47,000 tons of yarn we have produced approximately, and we have produced about 80 lakh meters of fabric on the fabric side.
Sales also, we should assume similar almost?
Yes, and sales is slightly better. The inventories have gone down. Sales has to be better.
Sir, can you give me the sales volume figure if possible?
It is there in the presentation itself, and exact number is not there. My colleagues can highlight the exact number.
First volume number, 22,481 metric tons of yarn we have sold in this quarter.
Okay. And this is including of the captive consumption for fabric?
No, it's outside sales.
Outside sales. And what would it be including that? Would it be similar to this 27,000 tons or more, including captive consumption?
Pardon me? Total sales including captive.
Yes, sir.
Plus captive consumption. What is the figure?
Yes, sir.
This production is 27,000 tons and about 5,000 tons we have consumed internally. The total is 27,200 or 27,300 tons. Yes.
Okay, sir. Thank you so much.
Thank you. The next question is from the line of Sandeep Dey, is an individual investor. Please go ahead.
Yeah, good evening. I just want to check what would be the capacity utilization for the knitting unit, knitting fabric unit.
It is about 60% at the moment.
60%. Okay, and how much, like for fabric, you mentioned that the capacity is about 40 lakh meters. About on the knitting side, how much is the capacity?
That is in the kgs, in the tons. The knitting capacity is about 28 tons a day, that is 11,000 tons every year, and we are at about 60%. That is about 1,700 tons for this quarter.
Okay. Secondly, on the project IRR the IRR that you mentioned for the new capex of 14 to 15%, that's the project IRR, right?
Yes, exactly. Yes.
So given that your debt will be at say about 6% and the debt equity is more like 3:1, the equity IRR will comfortably be about 20%.
Yes, exact number I'm not having, so should be better definitely.
Okay. And lastly, any expectation from the coming budget?
Cannot comment expectations. We have a lot of expectations, but we have been discussing engaging with the government at various stages. Our associations are also engaging. So do not want to speculate on that particular front. That is something they will do what they want to do. But we have been requesting them for a lot of things.
My query was particularly on the custom duty, which has been a burden for the industry. So do you expect any changes there?
I don't know. I do not, to be very honest with you, this is something which is involving farmers, community, the minimum support price operations, and various multiple factors. So government will take a holistic view and then accordingly decide. So no comments with that.
Okay, thank you.
Thank you. A reminder to all participants to ask questions. Please press star and 1 on your touchtone phone. The next question is from the line of Uday Kumar from UK Capital. Please go ahead.
Hi, sir. Am I audible?
Yes, you are. You are.
So, what were the realizations of woven and knitted fabrics in this quarter? Are we observing any signs of demand improvement in the segment?
The realization was in the range of about 160. In the woven fabrics, it was about 161 rupees per meter. So it is more or less stable what it was there earlier. Means that decline, there is a slight decline which is similar to the raw material cost, not a major decline there. So demand definitely is better. Demand in that segment is definitely better. That is why we are targeting to increase our capacities in that segment.
Okay. So the one more thing on the cotton price parity at the international and the domestic end. So what is your view on the cotton price going forward?
First of all, I think international. First, let me highlight on the international. International cotton is means the New York futures, which defines the cost normally for most of the people, is at the lower end of the cycle. It is the cotton cost which is there with various countries. It has already breached some of the levels. So that is one basic thing. It's a very good crop this year, much higher than last year. About if you see in US as well as in Brazil, also Australia is stable. China, there is a higher cotton supply. So altogether, the cotton prices, we do not see a downside of more than 5 to 7% from here in the raw cotton internationally. As far as and of course there is not a very big demand improvement as well to take it to a very high levels. So it should remain range bound at the lower end. As far as Indian cotton is concerned, we are at the minimum support price level. Today, as we see, nearly 45% of the crop is getting garnered by the government agency Cotton Corporation of India. So the second half will be decided, the second half prices of this cotton season from April to September will be decided by the Cotton Corporation. We have made a lot of representations with government to keep it industry friendly and not and should do the parity with the have a parity with the international prices, and accordingly the cotton should be made easily available to the industry. We expect that government is very sympathetic on this front as well. So we are in lieu of that, we are thinking that cotton prices will remain as it is very today it is.
Okay. So what is our average cotton price and the inventory level we have right now?
I think I'm not having the exact number of the cotton inventory level, but last quarter average cotton cost was about in the range of 161 rupees a kg. So it should be lesser than this, definitely.
Okay. Thank you, sir. Thank you for taking my question.
Thank you. As there are no further questions from the participants, I now hand the conference over to Mr. Avnish sir for closing comment.
Sir, we are hearing a lot of things from US, especially from the Trump tariff side. So any read into from our business perspective or overall textile industry perspective? That's the first. And second, anything which can concrete comes from the budget side on the industry?
First of all, the effect of on the tariff side should be positive only for the industry. We already, government of US has already removed the GST benefits which were available to our Indian textiles. So we do not see any further, that was removed about 2-3 years back itself. So we do not see any further tariffs coming on that side. Yes, if the tariffs are imposed in general on the Chinese imports, then that should benefit, and relatively we should be in a better position to supply the garments and as well as the home textiles over there. So that is going to be some advantage only from the Trump tariff era, which we are supposed to see going forward. As far as budget is concerned, to be very honest, we do not have any concrete thing available known to us that what is going to come in the budget. We have, as an industry, from the associations and from our companies as well, we have represented many things. We hope, we are expecting that government is sympathetic to this industry. They are understanding very well that this is an industry which is very important for overall employment in the country as well as for the growth of the manufacturing as well. So they would be considering certain benefits for sure. Let's hope for the best. It is just 3-4 days ahead now. So I do not want to speculate anything there.
Okay, sir. Okay. Thank you very much, Dinesh sir and Maheshwari sir, for giving us this opportunity to host the call. Anything for closing comment?
Yes. Thanks a lot, Avnish, for hosting the call, and also the Smiths for organizing this call. I am hopeful that we have been able to take care of all the queries which have been there. If anything is not done, maybe we can write to our investor relationship advisors as well as to our finance team. And thank you all for taking out the time and joining this call. Thank you very much.
On behalf of Nitin Spinners Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.